Welcome to Invest. We're talking about investing, finance, and professional development. As the current time of 9:01 a.m. on the Eastern Time on June 10th on Friday, the overall crypto market and the equity market is bright red this morning with respect to the CFI report that came out at 8:30 a.m. on the Eastern Time this morning. And the overall digestions and the sentiment from the market so far, obviously the numbers is it seems like it's reaching a historical number again. Inflationary pressure has risen by 8.6% in May, which is the highest level since 1981. And with that obviously negative catalyst driving the entire market to be selling off, right? Dow Jones, S&P, Nasdaq all down respectively at a pre-market perspective about 1.75% so far. While at the same time with respect to the 10-year yields is flying up in the sky at the moment at 3.1%. And at the same time, the 2-year treasury yields also surge above 2.9%, which is astronomical. At the same time, oil is more of a supplementary factor that we also want to gauge. It seems like it's also risen to around like $122 per barrel at the moment. And with respect to some other news that I'm also seeing right now, it seems like Goldman Sachs and JP Morgan both have downgraded a selective of tech stocks as a sell due to obviously the recessionary risk that we're experiencing and rising competition. And also with respect to some of the lingering factors that we've observed so far, there's been some corporate adjustments across the board, right? 10%, 15% of a shave on the human capital front. Seems like there's some job cuts that's hitting the cybersecurity industry that is being announced this morning. So it's obviously a negative report that came out, and if I look into the numbers specifically, let's see how far off we are, right? So it seems like the Dow Jones estimate was 8.3%, and we have risen to 8.6%, which, Dow Jones was already being relatively aggressive on their assumption that 8.6% is just, a number that is bananas, basically. And if you exclude the volatile food and energy prices, which is obviously with the higher food costs and just necessity costs, and also energy is basically related to gas prices, is still risen by 6%, which is also slightly higher than the already aggressive adjustments of percentage by 5.9%. So it's definitely not good across the board. It's definitely indicating that inflation is still a big problem, and when you see that, the rates will rise, which gives us a supplementary evidence in a way, stitching that story that will come up on the 14th and 15th next week, right, which is the FOMC meeting where we will get the confirmatory signal on what Jerome is going to be doing. And I think the likelihood of raising the rates by 50 basis point would be very likely. It's very unlikely that he would be a little bit more alleviated or be more reserved in terms of being, raising the rates. I think the likelihood would be more like 75% going into the meeting on the 14th and 15th, which we will technically hear the confirmatory signal on the 15th. But we will obviously hear some anticipatory pressure ahead of time, right? So that means more sell-off is coming, which is the technical is already showing that, so it's not a surprise per my videos that I've been talking about so far. So let's just dive into the technical without wasting more time. Respective recording time of 9:05 a.m. on the Eastern Time. We are at the 1733 at the moment, down about 3% so far. We're gliding back down to the level of 1700. 1700 is the level of substantive support, right? But we know that with respect to the MACD, we still need to cross down and cross up, right? So ideally, breaking 1700 is very likely, despite us being oversold at the 36 out of 70. So going down to 1700, 1650, all the way down to 1550 would be very logical. We're still in a downward trend, so reaching to those levels allow for the market to basically cross down as a depth cross, and then cross up will be very likely, especially with the FOMC meeting that's coming. And then we still have another hurdle, which is the next July CPI report and the FOMC meeting as well, all the way until we glide into more of a grace period or a peaceful period of August, which is, we technically have like a summer off until we reach the next month of the September CPI report and the FOMC meeting again, right? So with respect to Bitcoin at about 1.5%, we're gliding back down to the next level of the flat number, not a real level, right? 28, 29, 500. So I think, again, we need to cross down and then cross up, right? So ideally going back down to like the 28, 500, 27, 500, reaching all the way down to potentially even 25, 500, which we've seen before, would not be a surprise, right? Ultimately, we need to cross down and then cross up at the 43 out of 70. So seems like obviously Bitcoin is not as oversold in comparisons to Ethereum, which makes sense in that ratio ETH to BTC perspective. So something to think about, right? Obviously, Bitcoin is a much larger animal, so it's a lot more stable in terms of the market volatility, if you may, right? For Classic, we're about to form a depth cross. You can see it right now. So ideally, coming down to like below 20, like somewhere around 1950, all the way down is logical DCA from here. Dogecoin at about 3.1% at 7, like the mid 7s, right? And I mentioned that anywhere from like the high 7s to low 7s, all the way down to like the 65 would be logical DCA from the current frames. And with respect to Cardano, we are gonna break it, so it's gonna. I think the sell off for Cardano is gonna be quite negative because like we have a gap here that needs to be filled. So ideally somewhere around like below 50. I would be more conservative, like anywhere from 45 cents below from here. Solana down about 5.11% so far. We're still struggling around the current setup. Again, we need to cross down and cross up, right? So ideally breaking 38, which is a substantive level, but in between level to 35 would not be a surprise to us. And then XRP down about 1.6% at 40 cents at the moment. I would say we need to cross down and cross up. So you need to come down further to like around 37, 35 cents-ish, and then all the way down. From there, allow for the cross down and then cross up from here, right? And then Polkadot down about 4%, $8.83 at the moment. I would say like mid 8 all the way down to 7. Again, you need to cross down and cross up, so you still have to kind of look at the technical before you start it pulling in. Algorand's down about 9% so far at 37 cents. We're gonna form a depth cross, obviously. So, but this is like a new bottom that we're forming all the time. So like all the flat numbers, like 35 cents, 30 respectively, if you believe in this long term. Shiba Inu is dead in the water, still trying to hold on to the to the ledge. And with respect to 1,000, as we close in on the 3 digits, like anywhere below 1,000, like 900-ish, all the way down to 800-ish is logical. And I think we need to do so because we need to cross down and cross up just like all the other ones. In respect to Polygon, down about 3.15% is 61 cents at the moment. I would say anywhere from like 55 cents all the way down would be logical DCA. And lastly, for AVAX, down about 5.35% so far. I would say anywhere from like, again, you need to cross down and cross up, right? But we're forming new bottoms as well. So like all the flat numbers, like 20 cents, 15 cents, even though we have not formed it yet, but we need to do so because you need to kind of cross down and cross up before you do so, right? It seems like Tesla on a pre-market perspective is $701, which is that a real level? That's a real level. If we break that, we're gonna go down to like somewhere around like 685. So it's not terrible in terms of incurring risk, but you need to cross down and cross up, obviously, just like all the other ones. Neo, just take a look at it. Pre-market is like kind of up a little bit. It's kind of a mixed earnings call that we had, right? But you could see that we are selling down already a little bit. So I think ideally coming back down to more of an optimal level of 1755 would be more logical. BABA, on a pre-market perspective at 112 at the moment, try to recuperate back up. But again, BABA is kind of a interesting one, but I would suggest actually taking some profit when we were at the peak of 70 out of 70 already. At the same time, we have been very dragged up, reaching to a level that we could not break above, which is 120. So definitely be careful on this one. Okay. So it seems like the market is trying to recuperate a little bit. Right, it's very negative report, obviously. On top of the fact that today is a Friday, especially as we're heading on to the next FOMC meeting. So, but don't panic because it's something that we kind of expected. It's like we know how it's gonna be playing out, and the technical doesn't lie to us, so we just have to stay focused on that front. Okay, so appreciate you. Have a good day and take care. Bye.